Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 19th of July. It's been a mixed to slightly positive week for markets. We've had further soothing noises from the Federal Reserve that they stand ready to continue with their stimulus. That's not been enough to prevent some switching out of the big tech stocks into the more defensive stocks, which has been positive for the Dow Jones, but less positive for the likes of the Nasdaq. On top of that, we've had the onset of the second quarter reporting season. It's been a fairly good start, which has been kicked off by banks, which have put in some pretty strong numbers so far, mainly caused by an increase in investment banking activity as a result of M&A, and also some further releases of impairments, something that had previously been weighing on the banking stocks, and something which should also be fairly positive for the UK banks, which start reporting in the week after. In the UK, we've got a continuing level of support in terms of the economy. We've seen that job vacancies have now risen to pre-pandemic levels, although employment hasn't. And of course, we've still got the furlough scheme to unwind. So the picture for the UK economy still remains slightly cloudy. Although that being said, the more domestically focused FTSE 250 has been holding up pretty well in the year to date. It's up around 10.3%. In terms of the other indices, again, year to date, the Dow Jones is up 14.3%, S&P 500 up 16%, Nasdaq up 12.8%, and the FTSE 100 up 9.1%. Turning to next week, there's a few companies to keep an eye out for. The first of those is Royal Mail Group, coming up with a trading statement. This is a share price which has risen by over 200% in the last year, and has resulted in its regaining its place in the FTSE 100 at the last reshuffle in June. Parcel revenues, obviously this is the big growth area on the back of online shopping. Parcel revenues now account for around 70% of total group revenue. So a couple of things to keep an eye out for in the trading statement is how they're faring on operating margin, their net debt position, and any further news on an implied dividend yield of something around 4%, which is fairly punchy in the current environment. Also, first quarter numbers from Vodafone. Shares have been rather less successful, down 9% over the last year or so. Net debt has been coming down, but what we need to look out for in this particular update is any developments on price competition. And of course, one of the things that still is dragging on the stock is the lack of roaming revenues in the absence of international travel. And finally, Unilever has its half-year numbers. It's also had a fairly mixed year, down 1% at the moment, the shares over the last year. And that's despite the effects of the pandemic, which would normally expect to play into its hand. Indeed, the first quarter sales number that we last heard were up 6%, especially in food and refreshments. But they also managed to announce a share buyback scheme, but holding them back, and this is something to look out for in terms of the update, is what's happening with the supply chain, because we've heard from other companies that freight costs have been increasing. Thank you for watching. Have a great week.